Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Tuesday afternoon, we have Shawn, Cruz, manager of trader services at TD Ameritrade, to discuss Nasdaq-100 performance, trends in the Nasdaq Volatility Index, or what we call VOLQ, and of course, Microsoft and Apple earnings as we get into the thick of tech earnings this week and the following. Shawn, it's great to see you as always. Let's pull up your first chart here and get a fresh levels in the Nasdaq-100.
Yeah, one of the levels I was actually keeping an eye on earlier ended up being what looks like some interesting support here intraday, and that was right around that 14,785. Looked like it had actually served as a little bit of a significant price level over the past 20 days or so. So I was interested to see if that was going to hold. If that didn't hold, then I was probably looking at maybe something down around 14,707, and then below that, you had to go a little bit further down to see an area of support that was right around 14,500, but we almost jumped right off of that 14,785 line, and now we're actually making a little bit of a recovery into the end of the day. I think it is going to be interesting to see how this market opens. One, how we close, but then also how the market opens after we get some pretty big earnings from these tech companies tonight after the close, and then there's a few more that follow on throughout the week.
Shawn, any clues that we're seeing in VOLQ that could let you know a little bit about the direction that these stocks might have to go? Because it seems as if, we've only had a quarter of earnings report so far, at least in the S&P 500, that if you're not making your quarter, you're getting slammed. And if you are making it, you're really not making that much of an impact. So I really think that, whether it's guidance or any clues that we can get from VOLQ would certainly be helpful here.
Yeah, I think so. And the one thing is, to your point about just how you maybe are not seeing as much of this massive pop to the upside when you beat, or it's just a little bit harder to come by. If there is a concern that maybe you hear from investors, and that as well as this is a sign that we're topping out, or should we expect maybe a major pullback? If you look at VOLQ, with VOLQ, it's still a little bit elevated off some of the lower levels we had seen, but it's still below that 20 handle. And to me, that indicates there isn't any sort of major concern or anything that would at least have me really concerned that there's going to be a massive sell-off in the works, or investors are getting really cautious or really nervous up here. I do think right now for a lot of these companies, though, it's not going to be enough maybe to have some pretty good revenue and some pretty good bottom line growth. I think really looking at margins and also what you can guide and forecast for, that's going to be, I think, what really makes or breaks a lot of these companies going into and out of earnings.
And Shawn, let's talk about earnings. Apple, Microsoft, of course, two key heavyweights in the Nasdaq-100 that have significant influence on the price action of it.
Yeah, and I think this is sort of the start of these mega cap trillion-dollar tech giants. They're going to be coming out and reporting. It's very significant because they have a very heavy weighting in a lot of the major indices. So as these companies go, they could almost drag the index in either direction, depending on which way it breaks. But looking here at what we're expecting for these companies, starting out, we can look at Microsoft, looking like there's about a $5 range that is expected to trade in post earnings. So we're looking for, I'd say, about the 291.50 on the upside and 275.50 on the downside for Microsoft. Which, I'm sorry, that's an $8 range for Microsoft. But looking at that doesn't seem like anything that is a massive move. And it'll be one thing if you maybe just don't see much of a reaction post earnings, and maybe a little bit of a drift in the days that follow. For Apple, that's when you're looking at about a $5 range, up towards that 151 or maybe down towards 141 is sort of the expected move post earnings for Apple. So I do think it's going to come down to, one, showing steady growth, and I don't think there's really much concern around that. I do think it's going to be on the forward guidance.
All right, Shawn, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.